Welcome, dear traders. You are watching a recap of the Asian session on September 1. Today is the first day of the academic year. Many students are back to school, and we offer you to join our lesson on the Asian trade. You should never stop learning and gaining experience if you want to achieve financial success in the market. Every new piece of knowledge is a small step toward your goal. It's me, CAIXIN, and I will tell you about the Asian session today and help you expand your trading horizons. If you have been watching our recaps, you may have noticed that Asian Pacific markets rarely move in the same direction. As a rule, some of the stock indexes go up and others go down at the same time. Today, stocks in Japan, South Korea and mainland China surged, while Australian and New Zealand stocks dropped. Moreover, the Japanese stock market showed its best performance and hit the highest level in 33 years. While the stock indicators of the antipodean countries sometimes blindly follow the United States and Wall Street, Japan chooses to move in its own way. The world's third largest economy posted a 4.5% increase in its capital spending in the second quarter. Take a look at the chart. You can see that capital spending among Japanese companies looks very uneven. Who can name the top industries in Japan that are contributing the most to the gain in capital spending? That's right, these are general-purpose machinery, electrical machinery, and information and communication electronics equipment. In the second quarter, the auto industry was the strongest, while the others cut back on their capital spending. Nevertheless, the Japanese economy is recovering quite well after several years of crisis. The Japanese currency is also doing well today. The yen has strengthened against the US dollar amid robust domestic economic data. In our previous reviews, we have noted that the dollar-yen pair is in the intervention territory. That is, the yen is depreciating too fast against the US dollar. In such an environment, the Japanese authorities closely monitor the national currency's movement. Notably, they act in the same way as teachers deal with the disruptive students. They warn first, make comments, and intervene only as a last resort when all preventive measures have failed and the currency market has gone off the rails. Last year, the price above 145 was threshold for the Bank of Japan, and this time the regulator's patience has other limits. The verbal interventions have already borne fruit. Today, Japanese Finance Minister Shunichi Suzuki made another verbal intervention and reiterated that sharp movements in the exchange rate were undesirable. As a result, the Japanese pair went down on the comments. The official's remarks encouraged the weak yen, and it continued trading in the red within the range of 145.20 and 145.70. As you can see on the chart, the pair closed the Asian session inching to the area of 145.40. However, you might have guessed that the yen was able to strengthen because the US dollar eased pressure on its G6 currency basket counterparts. The greenback was trading lower in the range of 103.40 and 103.80 in the Asian trading. The US currency tested the psychological support level of 103.50, but then strengthened slightly above this level. Nevertheless, the US dollar is expected to fall at the end of the week ahead of the US employment data. The Fed's interest rate projections have been the main factor of growth or decline for the greenback. However, another possible trigger was added to them this week. And the fact is that the latest statistics point to the prospect of a decline in the country's economy and the beginning of a possible recession. In the second quarter, US GDP was revised downward. Private businesses hired the smallest number of employees in 5 months, and the core index of personal spending in July remained at the same level on a monthly basis. According to analysts at Morgan Stanley, the US economy is expected to grow in the third quarter on the back of a rebound in consumer spending. Morgan Stanley projects that more than a third of the spending growth will come from ticket sales for the Barbie movie as well as the Taylor Swift and Beyoncé tours. These beautiful ladies will contribute $8.5 million to US economic growth, supporting the US dollar. The sentiment about China has been revived a bit today. Do you remember what are the main problems in the Chinese economy? Who wants to list them? Raise your hand. Yes, I see you listed carefully. Well done. The weakening yuan and the threat of a deflation have forced the Chinese authorities to take drastic measures. As a result, the People's Bank of China announced that it would cut the required reserve ratio by 200 basis points at once. On September 15, the ratio will drop to 4% from 6%, freeing up $16.4 million. The regulator noted that this would expand the ability of financial institutions to use funds in a foreign currency. In Asia, the increase in China's manufacturing PMI encouraged investors. The indicator rose to 51% in August, and this was the highest rate of growth in a manufacturing activity since February. Moreover, August was one of the 5 months since the beginning of the year that saw a rebound. Output, new orders and employment, which had been falling since the beginning of the year, also posted gains. The upbeat news brought some relief amid Beijing's many efforts to revive an economy that has weakened amid imposed restrictions. Against the backdrop of conflicting trends in the United States and China, the antipodean currencies were volatile on a Friday. The Chinese economy, the most important trading partner for Australia and New Zealand, remains weak. The measures promised by the Chinese authorities have yet to support the economy. Meanwhile, the US market is showing a clear trend. In addition, one of the most important reports for the US regulator, August non-farm payrolls, will be released today. As a result, the Aussie bulls retreated and the Australian currency traded in the red, within the range of 0.6446 and 0.5902. The currency closed the Asian session just above 0.6470. The New Zealand dollar followed its Australian counterpart, and the currency copied out the Aussie's chart. The Kiwi traded between support at 0.5943 and resistance at 0.5989. It ended the Asian session consolidating at 0.5960. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is the key to success in your trading. See you online soon.